Thank you, everyone, and thank you to Reed Corporate and Nicholas and the team for hosting us here today. I've had a word to the Sofitel staff, and they will not be serving any drinks until 5 seconds past 5. So there's no point in rushing out. You may as well sit here and persevere through this with me. As we've heard, Ausgold is a developer. We recently launched or released our definitive feasibility study about 3 weeks ago now, outlining a large straightforward CIL open pit project in Western Australia. Our location there, as you can see, is in the southwest of Western Australia. It's about 3.5 hours drive down the Albany Highway from Perth, 30 kilometres east of the town of Katanning. Katanning is a regional centre for the agricultural industry. This is the wheat belt of Western Australia, a town of about 5,000 people. We are seeing exceptional support from the Shire. We're in the process of negotiating to lease a block of land on the outskirts of town where we want to build our accommodation village for the mine. The town was very keen for us to the Shire was very keen for us to put it in town as opposed to out of the mine, which I think speaks to the level of support we're enjoying. So I'll get into the sort of the most recent news, which was the definitive feasibility study. We set out to try and sort of outline a 10-year mine life, which we've been able to do. I think it has a lot of attraction on a range of different metrics. 10-year mine life. The first 7 years are 130,000 ounces a year. It trails off a little bit in the last 3 years as we start to pull down on our stockpiles. We think this gives us a lot of time, more than enough time, to more fully prosecute the large land position. And I'll take you through that. And that's really why I joined the company 12 months ago. Was Ausgold, really through a bit of an accident of history, has its foot on 3,500 square kilometres of its own greenstone belt. And this greenstone belt here was not fully recognised by the Geological Survey of Western Australia. I think they were too busy supporting the rest of the country to actually nominate this as a greenstone. This has only recently been done, and Ausgold's been able to peg the whole lot of it. The feasibility study, I think, outlines a project, the 10-year mine life, that gives us the engine from which to fully leverage that potential. 10-year mine life, 355 million Aussie CapEx, pre-production capital. We think that's a really good, solid number. The feasibility study we decided to deliver is one that we are prepared to eat our own cooking with. A lot of feasibility studies or studies that you will see are really just marketing documents trying to attract the takeover fairy. We've gone ahead and actually put something that we're happy to stand behind. We actually think we'll be able to improve on this and deliver better results than what you see in this feasibility study. I've been taken over 4 times in my career, twice having built the project and twice as a developer. So, that's that typical question of whether we're going to build it or want to be sold. It's irrelevant to us. We're forging ahead to build the project unless someone has a better idea. In terms of the feasibility study, 10 years, as I mentioned, we have a mineral resource of nearly 2.5 million ounces at 1.1 grams. 91% of that resource is in the measured and indicated classification, and of the reserves, we have 1.25 million ounces of reserves at 1.11 grams, and 84% is in the proven category. I think it would be safe to say that very few projects at this stage that you will see owned by a junior developer enjoy 84% of their reserves in their feasibility study at the proven phase. And that's really a result of the very extensive drilling that's been done at the Katanning Gold Project. It was a small past producer in the 90s, but there's been nearly 300,000 metres of drilling put into the project in just under 4,000 holes. So this is a very well drilled, very well understood and modelled deposit. I mentioned the throughput, 3.6 million tonnes per annum. We think that's right size for what it is. It does have the concept of being able to expand it based on future exploration success, so that's a key focus for us. But at the moment, we think the 3.6 million tonne per annum plant delivered for 355 million Aussie gives us a great foundation from which to go forward, both generating a lot of returns, but also really unlocking that potential of the district. In terms of economic returns, it's very compelling. The after-tax NPV at $4,300 is just under $1 billion Aussie. That's after tax. IRR of over 50% and a payback around 13 months. If you use a gold price a little closer to what we're enjoying today, and we use $5,100, that NPV after tax goes to 1.35 billion. Our current market cap today is circa 250 million Aussie. So we think that, forgetting about the long-term potential, there's a great runway for us to increase our valuation as we de-risk the project, as we permit the project, which we're into, we finance the project and ultimately build it. This project in production in Western Australia would be significantly more valuable than what we are today, and we think that that pathway with a well-experienced team and a solid project is well within our gift to achieve. Talked about the mine plan. You can see there, very even production for the first 7 years. We draw down on stockpiles. Ultimately, what I think you'll see, and we're very confident that we'll be able to display this, is that production profile continues for many years on. This is just a snapshot in time. This is just based on the drilling that we've done. I fully expect that we'll be able to add many, many years of production to the project. Processing, straightforward. CIL, it's being done many, dozens of projects through Western Australia at the moment. Recoveries, straightforward, just over 90% life of mine, a very clean system, no refractory aspects to this. This behaves very well from a metallurgical perspective. Very good returns, as you'd expect. So we are a very competitive project. Life of mine, all-in sustaining costs are just on 2265 life of mine, 2180 for the first 4 years. So there's a really strong margin. These numbers were done at the $4,300 gold price, our sort of base case price. But you can imagine at today's gold price, these margins are significant, generating those really attractive returns that I mentioned at the start. In terms of where this sits in the universe of Australian gold projects, it's again very competitive, very much within the second quartile. When we sort of released the study a couple of weeks ago, I did have a few comments to say that this was the first time that they'd seen a feasibility study that wasn't in the first quartile. But so we sort of apologise for that. But again, that's really hewing to that theory that we're going to build this project, and we believe that we're going to be stuck around, and we're going to have this be judged against this document in the years to come. But you can see there some real household names. I mean, these are some real sort of solid foundation mines in the Australian gold industry, and we sit very comfortable, very happy with where we sit compared to others. Robust economics across a range of different scenarios. As I mentioned, sensitive obviously to recoveries and gold price, as well as a grade. I think the fact that 84% of those reserves are proven speaks to the lower risk nature of this project compared to many others that you would look at even at the definitive feasibility stage level. Significant contributor to the local economy. I think that's what the Shire of Katanning and the regional shires are looking to. Very dependent on agriculture. This is broadacre farming. Those farms have consolidated and mechanised over recent years. Not as many jobs on farm as there were. Some of the jobs, like at the local abattoir, fairly low-paying, itinerant type work. And I think the local communities see the benefit of having the sort of the high-paying, stable mining jobs that we're going to bring. Talked about the resource. So one of the nice aspects of this project is the vast majority of the ounces are included in the one central pit. You can sort of see there on the right of screen, that's the Jinkers South and Central Zone. That's about 85% of the ounces come out of that main pit, so very efficient. There's two small satellites to the north called Jackson and Olympia, and then another satellite to the south at Dingo. This deposit is open along strike to the south and down plunge at the Central Zone, so there's plenty of room to expand it. But at the moment, it's a very nice, compact mine site with an efficient mining layout. I mentioned the reserves, as you can see, very, very robust. Again, 35 million tonnes per annum. Strip ratio is about 6.5. But that's, I think, very good compared to the grade that we're mining life of mine, especially the 1.3 grams per tonne for the first 4 years. But again, efficient. So when we went to tender with the mining contractors, they liked the fact that this is not a lumpy mining schedule. It's not a big cutback in year 3 or year 4. We move a consistent amount of tonnes and ore over the first 7 years, and then we fully expect that to continue for many years to come. Processing plant I mentioned, it's a straightforward CIL plant. It's got a primary jaw crusher going into a SAG mill followed by a ball mill, gravity separation. We expect to recover about 25% of the gold from gravity, and then into the elution circuit, cyanide destruction out to a lined tailings facility. We have taken the option and the cost to put a liner on the tailings facility, a high-density polyethylene liner. That's really just a nod to the fact that we are operating in an agricultural region, and we don't want, we wanted to allay any people's fears that there may be sort of escaping water from our, into the groundwater. Again, this project will expand very simply. A second ball mill, some additional elution circuit or capacity in the elution circuit. We should be able to push this project to 5.5 million tonnes per annum, up from the 3.6. So when I touch briefly on the regional potential, just bear that in mind. I mean, this would be very straightforward to expand and boost the production beyond that sort of 140,000 ounces that we're seeing initially. From a permitting perspective, we have the dual track of the federal and the state permitting. We've entered the federal arena. We've made our initial referral. We expect that the federal government and the environmental department will be interested in a couple of animals: the Carnaby cockatoo, the red-tailed phascogale, which is a small mammal, and then the sort of the standing woodlands, the original eucalyptus woodlands. This is, as I mentioned, broadacre farming was very comprehensively cleared by the farmers over the last sort of 80 years or so. So a fairly degraded ecological value compared to a lot of other areas in the state and in the country. But bearing that in mind, we know that those standing original woodlands are sensitive. That little green checked area that you can see in the top right-hand corner is an area of such original woodland, and we've designed our project, the rather awkwardly shaped tailings facility and waste dump that you can see there, is to avoid touching that area of woodland. I think the most efficient outcome would have been to build a big circle. That we think would have given us a few challenges at the permitting. So we've tried to be sensitive and anticipate where the hot button items are. So we think that we'll get a good hearing from that. And with respect to the cockatoo, the Carnaby cockatoo and the red-tailed phascogale, very good mitigation strategies, feral animal control to help the red-tailed phascogale, and then sort of breeding boxes on live trees for the Carnaby cockatoo. Both mitigation strategies very well traversed for projects in the Great Southern region of Western Australia. So moving to the future, this is a long section from the middle of the deposit. As you can see there, some very significant grades on the left of the deposit there, and they trend down. So the high grade control here really plunges to the north. You can see the drill density in the left-hand side there is very high. It sort of gets a little bit lower as you go to the north. Like the speaker before, we've had our own challenges around land access, which we're looking to resolve. We actually have got we're in the Warden's Court in Western Australia seeking to have a determination made on compensation to move one of the farming families on the group. I should note that our relations with the other farmers in the district are very good. So unfortunately it's come to that, but this project is going to go ahead. But when we get access to that, and we expect that to be cleared up later this year, we can keep drilling there along the right, and we expect to see this deposit grow substantially. That's an artificial drilling constraint, not a geological constraint. These were drilled in 2022. That's the last time we had access to that part of the deposit, and they were some of the best holes that were drilled on the project. So expect to see significant results and hopefully significant growth in resource and reserves through this. If Katanning gets really big, this is the avenue that it will do so firsthand. Talking about the region, 3,500 square kilometres of tenure that you can see there, that's the greenstone belt overlaid. We have some prospects, and I know it's sort of short for time here, but keep an eye out for Nanakup Bridge Zinger, which is to the southeast of Katanning. That's shaping up as hopefully several 100,000 ounces of resource. That's the target that we've set for ourselves this go round, starting in October, with the idea there being a nice oxide blanket running around 1 gram with some higher grade material sort of showing up in the fresh rock beneath. What we're looking to do there, have a maiden resource early in the new year, and then sort of integrate that into a scoping study. We have a small high-grade deposit to the north, about 4 kilometres, called Dardatine, and another one called Duggan off to the northeast. Hopefully what we're looking at around the middle of next year is a scoping study talking about that expansion of the plant, bringing those materials in, boosting that production, that throughput to 5.5 million tonnes per annum, and hopefully closing in around 200,000 ounces of gold. First job, though, is to deliver on the promise of the definitive feasibility study, 140,000 ounces a year, which we're very confident of doing. And here's our timeline sort of working towards. We're working through financing and permitting now, targeting a final investment decision in the second quarter of next year, 18-month build, and hopefully pouring gold bars by the end of 2027. And thank you very much.